Hey guys, welcome back. Chapter 9, Conversion Business Process. So, just taking a look at this chapter, chapter is going to examine the conversion process whereby manufacturing companies convert raw material into finished goods. We continue our comprehensive example to develop activity and structure models of the process, and we're going to show how the activity-based costing model, in conjunction with the business's rules, can be used to develop, implement, and monitor control activities. We show how the structure model can be used to develop relational databases to support the information processing requirements. So, Chapter 8 examined the purchases and payments process, and it continued the comprehensive example that we're using to examine typical processes, activities, and data structure. Chapter 10 is going to provide a hands on review to review chapters 7, 8, and 9. Um, with that said, the conversion process is inherently more complicated than the sales and collection and purchases and payments processes that were described in the prior two chapters, primarily because of increased record keeping requirements and variation in the sophistication of the process itself among companies. Many types of businesses employ conversion processes, including bakeries, wineries, breweries, restaurants, car repair shops, construction companies, equipment manufacturers, automobile manufacturers, and so on. So, the conversion process includes business activities related to the maintaining inventories of raw material and finished goods, producing finished goods from raw materials, tracking direct labor and direct equipment costs, and applying overhead. The conversion process generates accounting transactions to record the transfer of raw material to work in process and work in process inventory to finished goods. In addition to the cost of raw materials, the conversion process must also account for direct labor and other direct costs incurred in determining the cost of goods manufactured. The allocation of overhead and indirect costs to work in process is typically based on direct labor, although overhead could be allocated based on a number of cost drivers in an activity-based costing system. More specifically, conversion costs are typically accounted for at standard, where the standard is based on management estimates, and then the costs are updated to reflect actual costs incurred. Exhibit 9.1 will describe the typical transactions resulting from a conversion process. In addition to the accounting transactions, the specific details of the conversion process are tracked in the individual job. So that's a lot of information. Let me sort of talk through what's happening in a conversion process. So, um, what you have is you ultimately, this is sort of a manufacturing company that's producing its parts. So think of it like this. Uh, when you buy the inventory, a lot of times you're buying raw materials. Okay, so there's on the balance sheet, you have three categories of inventory. You would have your raw material, you would have your work in process, and you'd have your finished good. Let's take it from a real estate company standpoint. Uh, a developer, somebody who's building homes. So you're going to buy all your lumbers, your screws, your roof, your concrete, your wiring, your uh, flooring, your bathtubs, all of this. You got all these raw materials. You have to put all of those together. So now you're going to have workers that go out and work on the house. Those are going to be direct labor. That's all direct labor. But you have the back office that maybe you have some people supervising. That's going to be indirect labor. Okay. So you have your accountants. They're going to be indirect labor. Your purchasing staff. That's indirect labor. They're not actually building the home. Your secretaries. That's indirect labor. Your CEO. That's indirect labor. But you're going to, all the people that are actually working, that's part of your direct labor, that's your direct cost of your house. You're also going to have some overhead, like utilities. You got to run, not the utilities going into the actual home, but what about the utilities for the home office? What about, rent for the home office? you're going to have some overhead as well. And so you have your sticks and bricks, which is your um, that's going to be the development, and then you've got your direct labor that puts it together, and you're going to have some overhead costs. Um, but you buy the raw materials, and then it comes out of there and transfers into work in process when you start building the home. Now, in that collection process, you're going to end up incurring some building, during that. Then it's going to go. You're going to get some overhead that also is absorbed into that cost, and ultimately, it's going to come out of work in process, and it's going to go down to your finished goods. Now, when you have a finished house and you're ready to sell it, that house is going to leave think of the journal entry. It's going to leave as a credit to inventory, and it will be a debit to cost of goods sold. Okay, so it comes out of your balance sheet and goes into your income statement uh, on that move right there. And then when you sell it, you're going to recognize your revenue, and you're going to get some cash. It goes back into your balance sheet. So then your gross profit will be the difference between that revenue credit and your debit to cost of goods sold. So looking at that on this Exhibit 9.1, you can see where your typical conversion process, when you record the transfer of raw materials to work in process, those are two inventory accounts. So you've got your credit to raw materials inventory at 2875, and a debit, it's just moving out of raw materials and it's about to be built. Then you've got manufacturing wages. So that's recording the actual payroll to put that together. Okay. And now we've got to record the direct labor payroll. So then this comes, so of the 4650 that was actual manufacturing wages, only 3250 was direct. That means the difference would remain as an expense as indirect wages in that manufacturing wages. So 3250 comes out of wages and is included in my work in process inventory. And then we have another 1400 here. That indirect labor was still part of the process. That 1400 comes out of wages and it goes into overhead. So that's our overhead category. And we're also going to add our utilities into overhead as well. So we're putting that as a payable, but we're charging it to overhead. Okay, and then our work in process inventory, we're going to move it out of overhead, all of that collected overhead, and we're going to put all of that into our work in process inventory. It's all part of work in process. So then at the very end, we have a loaded cost that includes all of our direct materials, all of our work in process, all of our direct and indirect uh, overhead, and all of that is part of our finished goods. So if we sell it at $12,000 and we have 10,188, we make a profit. If we sell it at 9,000, we didn't sell it for what it cost us to put it together. And so that's why the costing piece is so important. So hopefully that little illustration helps you understand what's actually occurring in this example. And if you have any questions, just reach out to me. I'll be glad to help you with all this. Thanks again, and God bless.